Hey guys, what's up? Alec back with the daily stock market, and look at that huge red day. Coinbase is down 20%. Shopify is down 14%. We took a put option out on Shopify and made 100% gains on Shopify put. And if we keep scrolling up, we can see countless and countless stocks down. Square is down 7%. Spotify is down 5%. Roku is down 8%. DraftKings is down 5%. SoFi is down 4%. And we even have huge companies like Microsoft. You see, the Microsoft misses Q4 earnings. They haven't missed earnings in over a decade. We can see that revenue came in $5 billion versus 5.24 that was expected. Earnings came in at 2.23 and it was expected at 2.29. And Microsoft is down after hours on missing. Now, if we go over to Google, we can see that they missed earnings as well, but they're up 2.5% after hours. So in this video, we're going to be doing an earnings update on some different stocks like Google, Microsoft. We're even going to try to go over Snapchat and Walmart. And if we don't get to all those stocks in this one video, make sure you subscribe with post notifications on, because we'll definitely talk about them in future videos. By the way, Chipotle is up 8% after hours after reporting a $9 EPS, $9.30. So they absolutely crushed their earnings, and they're still down 22% in the past year, by the way. So the first one we're going to dive into is Google stock. Is it a good price? What prices are we looking to buy in at? And what is going on with Google stock too? So what we can see right now is in the last 3 months, it's been following the support and resistance. The resistance is closer to $120 per share, and the support is closer to $106, $105 per share. So I definitely think that we'll see Google closer to $105 per share. Again, the question is, can it go lower to $105 per share to a multi-year low? Okay, so it has some supports as low as $100 per share. After that, we see $90 per share, $85 per share. Personally, I have price alerts set under $100 to buy a little bit heavier, but my heaviest price alerts are set at around $85 per share on Google. Google's turning into one of my favorite stocks in the stock market. Here's my position on them, by the way. The average cost is $109. I have about $500 in Google, looking to triple, quadruple my position size that I currently have right now. You can see the PE ratio is 19, implying that it is one of the best deals out of all the big tech stocks. We can see the market cap is 1.3 trillion, so it has some upward potential. Google stock rises despite an ad downturn, second straight earning decline. Profit and revenue come in a bit short of Wall Street's expectation, but ad revenues still grow. The results, while not eye-popping, may have mollified investors rattled by poor earning results last week from two other ad-dependent companies, Snapchat and Twitter. Okay, Facebook, Meta, is scheduled to report second quarter earnings tomorrow on Wednesday. We can see, we just got a notification, Chipotle up 8%. We already knew that. So Google delivered a disappointing quarter, underperforming our expectations almost across all business units, said a senior analysis at investing.com. Despite the underwhelming quarter, expectations were low that investors blew a sigh of relief, sending the stock higher. Profits declined 15% year over year, okay, after falling 8% in the first quarter. Google last saw earnings decline in 2 consecutive quarters, the first 2 quarters of 2015. So it's been about 7 years, when the declines came in at 2.3% and 1.8%. So this time, it's drastically more, 8.3 and 15.6 compared to 2.3 and 1.8. Alphabet's operating margin was 28% this quarter, down from 31% a year ago quarter. In the second quarter, our performance was driven by search and cloud. The investments we've made over the years in AI and computing are helping to make our services particularly valuable for consumers and highly effective for businesses of all sizes. As we sharpen our focus, we'll continue to invest responsibly into deep computer science for the long term. So that's what the CEO said. Overall, it's not looking good in the short term for Google stock. You know, short term, they're definitely, I think, headed under $100 per share. So I'm waiting to load up on Google when we see a bigger dip closer to $85 per share. And the reason why I do want to load up on them during the dip is because they're a company that I do believe in long term. They're one of my highest conviction stocks in the market, especially if they get closer to $85 per share for a long term. And this is one I also don't mind putting into my retirement accounts and my long-term accounts too, because I know Google's going to be around for a very long time. Their investments, like they said, are going to take them to new places that they haven't been before. They're also a leader in artificial intelligence, which we're going to become more and more dependent on over the years. So I think Google is going to be here to stay for a very long time. So those are the price points that I'm looking to load up on Google for long-term investing. Real quick, if we just look at their income statement real quick on Google, we can see their net income has been growing significantly for the last 5 years, over 20 to 30% gains. And in 2021, it actually grew 88%. If we go over to total revenue, we can see that they've also been growing total revenue about 20% per year. So they get an A+ on net income and total revenue. If we scroll down to their balance sheet, they also have one of the best balance sheet for how big of a company they are. Okay, we actually see that they have 29% liabilities to assets, meaning their assets are almost 3 times as much of the liabilities, which is an awesome thing to see. And I love looking out for balance sheets like Google, where their assets easily can cover all their liabilities, because in a recession, they're going to be able to pay off all their debts and not go bankrupt. And the next stock that we're going to be talking about is Walmart, ticker symbol WMT, down 7.6% on the day. Remember, in the pre-market, they were down 9.5% because yesterday they reported earnings and they fell off a cliff, as you can see. So that's why we're talking about them in the video. We're going to be revisiting them. You can also see that there is some support right at $119 per share. So it looks like that it's going to be revisiting $119 per share. But can it go under $119 per share and revisit like a 3-year low or 4-year low closer to $90 or $95 per share? Some bearish things to watch out for is Sam's Club lags behind Costco in sales, profitability, and member attachment. The gulf will likely persist. Amazon also is another competitor they have to watch out for. Has a sizable lead in its marketplace of e-commerce membership offerings, while Walmart should have room to build its offering. We believe its third-party seller platform is well behind, and its Walmart Plus will take time to reach its potential. Competition is fierce throughout the retail, and Walmart will likely have to innovate to keep pace with not only Amazon, but also physical retailers that have increasingly investing in omni-channel capabilities like Costco. Some bullish things about Walmart to watch out for long term. The pandemic and inflation have lifted in near-term sales, with Walmart's historical steadiness in recessionary environments and reputation as a value leader suggesting it will be able to navigate a turbulent economy. Okay, I think it's also a stat that 90% of Americans live only 10 miles away from a Walmart. And you can probably think of a Walmart that's right down the street from you, at least 10 miles away. Walmart boasts purchasing leverage that allows it to minimize procurement costs and to keep prices low and traffic high. As America's largest retailer, Walmart should be able to capitalize on in-store network and digital investments to deliver a compelling omni-channel retail experience that no traditional rival can match. We pull up Walmart's income statement, we can see it looks drastically different. There's basically no growth in the last 5 years. It's very sporadic, and it's 10 billion in 2018 and 13 billion in 2022. So not much net income growth. If we go to total revenue, we see the same thing. Only around 2% growth over 5 years. So 500 billion in 2018, and if we go to 2022, we're still at 572 billion. So not much growth, but there's still growth. So it looks like they're going to be more of a value stock, less of a growth stock, keep in mind. Okay, this is not really a huge growth stock or anything like that. And they also have a worse balance sheet. So if you remember, if you want to rewind the video and go back to Google's balance sheet, look how much better it looks. The income statement is probably a D or a C. Same thing with total revenue. So that's why I keep going through these income statements and balance sheets for you guys. Hopefully you guys are starting to learn what to look out for just from watching these videos. And the balance sheet is also probably a C or a D with I would probably give it a C, like C minus, okay? So the liabilities are catching up to the assets. There's 152 billion in liabilities and 244 billion in assets. So of course they do have more assets than liabilities, which is a good thing, but it is catching up rather quickly. So we want to see the liabilities going the other way, starting to shrink. Analysts have a $145 price target in the next 12 months on Walmart stock. And if we scroll down and we can see this was just reiterated yesterday, one of the top 25 analysts, okay, Scott actually has a sell price basically. He's saying it's going to be $117 in the next 12 months. However, we have other 5-star analysts saying that Walmart will be above 150, just reiterated yesterday. All 5-star analysts coming from Oppenheimer Group, coming from Wells Fargo at $130 price target, coming from Citigroup, Paul, $150 price target. So it's good to see a lot of these analysts just reiterated this just yesterday. So this is a hot stock with analysts. I don't know if I gave my price targets yet, but I do want closer to $95 per share. I'm going to be revisiting. I have price alerts set at $95 per share, and then I'll make another video update on Walmart at that time. Right now, I'm not going to be buying Walmart. There's possibilities that it could maybe outpace the market. I think that Walmart's good for more of a 10 to 15% year growth for the next like 3 years, especially if you get in at $95 per share. I think that 10 to 15% growth over 3 or 5 years amortized, I think is very possible for Walmart. And that leads us with Snapchat as the last one with a $9 price target on its head. Okay, down 33% in the last week. That's why we're talking about them in this video. We're seeing if they are currently a good deal after a 38% drop. Remember, they were already down around 70% at that point, and now they're down almost 90%. Can you imagine that? Snapchat's down around 90% from all-time highs in less than 1 year. Obviously, if Snapchat ends up executing the correct way, it could be a huge comeback story, and the stock could 5x. It could possibly even 10x. However, I think that is a pipe dream, and personally, I'm not investing in Snapchat. I almost don't even care how cheap it gets. I hate to say that because I typically like to buy at least a little bit of every stock, especially if it does get very, very cheap. Okay, the market cap's 15 billion right now. I think, if Snapchat gets in like the $5 range, even at the $6 range, I think I'll be paying a little bit more attention to Snapchat than I am right now. Why is that? TikTok is a huge competitor. It's a scary competitor. Instagram is a scary competitor. Facebook's a scary competitor. It's just a scary space for Snapchat right now. And if any of the big social medias are going under or people are going to stop using them, Snapchat's definitely going to be the first to go. Okay? Snapchat gets another downgrade. TikTok possesses a growing threat in advertising. Earnings numbers highlight how Snapchat's advertising business is struggling as the economy weakens and competitive challenges mount. Most notably from TikTok, after falling nearly 40% just in one trading day on Friday, Snapchat shares were mostly flat at $9.95 on Monday, while the S&P 500 was up 0.1%. And you guys know we made a huge amount of money on Snapchat puts. Today, we actually made a huge amount of money on Shopify puts. Shopify fell around 13%. We had puts out on them. We have around 3 more puts out on the close friends list. So if you guys want to be a part of the close friends list and see what I'm buying and get a part of that program. So that way, it doesn't matter if the stocks are going down or they're going up. We're making money in the stock market group either way. So message me on Instagram. I just raised the prices on the website. So if you've been meaning to get on, here's your sign to get on. I'll honor the original prices till the end of the week. But as of right now, I did raise the prices. So if you check the website, it is a raised price. Okay, so if we keep going through the article, we can see that Nowak argued that the report sheds light on Snapchat's ad business, which he thinks is less developed than he previously believed. Snap managed to weather privacy changes Apple made to iOS in 2021 that hit direct response advertising, ads that seek to prompt people to sign up for a service or make a purchase. Another article states why Snapchat's pain might not be over yet. Another analyst downgrades Snapchat, warning that experimental spending from advertisers is likely to drop. Snapchat could feel a pronounced impact in his view if a few big advertisers pull back their spending in a recession, despite the recent progress to broaden the customer base. In addition, he thinks that Snapchat has focused more on a top of the funnel and mid-funnel advertising. Our calculations indicate that Snapchat's monthly ad revenues could be on a declining trajectory currently as advertisers across major categories pause spending in the light of a weakening macro environment. He wrote, overall, Snapchat is super speculative. It's had 5 years to get its act together and become profitable. It's still not a profitable company. We all thought 2021 was the year that it was going to become profitable, but it just can't do it. If we go to total revenue, we can see that the total revenue, it is a revenue monster. 40% growth, 50% growth, 60% growth. So that's all you're really hoping for at this point, is that it could find a way to take that total revenue and make some net income out of it. If we scroll down to the balance sheet, it's not the best thing ever. 50% liabilities to assets. That could be a little bit better. However, it's not the worst, so I'd probably give it like just a solid C, maybe a C plus. If we actually look and see what's going on here, cash and cash equivalents. So we see that they have $2 billion in cash, which is a really nice thing. They also have another $1.7 billion in short-term investments, which is another great thing. If we scroll down, we see that they do have $3.7 billion in total liabilities and about $800 million in total current liabilities. So overall, they are a super risky play. They're a little bit overvalued. They don't have a PE ratio. So when they don't have a PE ratio, we typically want to look at the PS ratio, which is 3.6, a little bit overvalued. Price to booking ratio, PB ratio, is also a 4.6, which again is a little bit overvalued. And I really don't want to pay a premium for Snapchat at this point. So like I said, once we see maybe $3, $4, $5, $6 Snapchat, it'll be a different story. However, analysts do see some upside potential in Snapchat. Okay, it's high risk, high reward. They have a 57% upside of the next 12 months. Okay, so very, very risky, but there is some reward potential with Snapchat. We have some analysts. We even have a top 25 analyst that looks like he didn't really weigh in on Snapchat at all. I think when it's a little line through it, that's just like the current price. It's just going to break even in the next 12 months. Okay, so what I'm seeing here is there's a bunch of analysts who just reiterated this 2 days ago, 5 days ago. There are a lot of 5-star analysts. Some have $16 price targets. Some have $22 price targets coming from Bank of America with a 64% success rate. We also have the only one that says sell at an $8 price target has only a 56% rate at Morgan Stanley, a 4-star analyst. The rest of the analysts, it looks like they have all higher price targets than the current price of Snapchat right now. Well, we actually have one more. Doug here from JPM has a $9 price target in the next 12 months for Snapchat. And we've had hundreds of students making hundreds of dollars and gaining hundreds of percent just in the last week. Here we can see one of my most recent students and my most active student, Jack. The Shopify one you mentioned was bringing me in huge. You're the man. Took a firm on my own, started picking up on what you're doing and learning to identify some on my own. My account was down like 35% before I joined with you, and now getting these, I'm up. I'm getting closer, down only 10% now. Okay, so it's slow growth, but it's steady growth. So even if you're a smaller account, these $300 plays here, $300 gain there, $500 gain there, it starts adding up to your account and chiseling away some of those losses. So if you can make money and learn a new skill while the stock market is going down and still make money, it's going to hedge you against for the long term and help you wait out a crash a little bit more, and you can buy the dip with some of those gains too. So if you're looking to be a part of that close friends list, message me here on Instagram. Also, check out success number 5 if you want to see more success stories. We now have over 500, almost 600 positive testimonials now. We now have over 1,500 people that have signed up for the program. So message me. I also raised prices like I talked about on the website. So now's the time to get in. I remember I'm honoring the original price, which is basically 50% off till the end of the week only. So if you've been meaning to get in for a while, now's the time. I just raised the price to $399 for 3 months, and it used to be $399 for 6 months. So you can do the math. You get a huge savings. Make sure you subscribe with post notifications on. Make sure you share this video with a friend, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.